Hi, welcome back to today's Morning Report on Thursday, the 23rd of April with me, Rich Pre-Market Analyst at Handtech Markets. Let's move on to my final chart appraisal of the day, and that's gold. And this gold chart you almost got a bit of direction out yesterday. You had a bearish outside day, and you had a break below the sort of initial support at 1191. But interestingly, today we've actually bounced pretty much bang on that 1183.70 support, 1183, so within sort of 5 cents, which that's within the sort of realms of spread. So I don't even think that's, that's basically bang on the support and rallied. That big strong candle that you got yesterday, the big outside day, actually has turned the stochastics negative, which sort of puts a bit of pressure on the support. So I would say, however, we're still trading in this range. You've got this trading band for the last few weeks between 1210.70 and 1183.70. So that has sort of rebounded off that today. Now, what you'd be saying, I think, is to abort or negate that bearish candle, you'd probably be looking at a move above sort of the 1195 support resistance area initially. A few old lows there, around 1195 area, and I think if you started to move back above there, you could start to think about having negated that candle. Now let's just quickly work this out because I haven't done this before. So 1204.80 to 1185, so it's almost, it's almost $19 worth of range on the day. So let's say sort of $9 up from the low of the day, which would be 1194. Yeah, basically that would negate, that's sort of like around the Marabuzu line of that candle, which is the midpoint of a big strong candle. So that would be anything above 1194. I would say is the immediate rally point that you need to see that would negate that sort of very bearish candle within this range. And I'm going to stress that again, within the range, because you've bounced pretty much from bang on the low of the range today, and you've held it intact. So we're still trading within this range. It is not broken down yet, although obviously the moving averages are falling away. MACD lines on the hourly chart are becoming increasingly negative, and I say that because it's sort of back towards 30, whilst the rally in the last few days has only sort of managed to get towards 60. So that is a more negative configuration. So this rally that we're seeing on the hourly RSI, for example, if it gets above 50, maybe that's a chance to sell. MACD lines are very, very much more in negative scenario here, although that crossover is arguably near-term positive. And I say near-term positive because it's sort of playing out this rally. But I think anything sort of, if you've got a rally or a lower high underneath 1195, then I think you'd be starting to get a little bit concerned that you're going to test the bottom of the range again. The big resistance initially comes in at 1204.80, which is that rally high there. And then obviously the big range high at 1210.70. But the way gold is going at the moment, and due to the sort of strength of the downside, it certainly looks like the pressure is being put on the supports of this band, and you might even get a test of 1178 in due course. Anyway, I wish you good luck in your trading on gold today. Unfortunately, I'm actually at a trade show in Russia for the next couple of days, so no chart analysis tomorrow, but I will see you again on Monday. Thank you.